please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. The markets are continuing the nice move that we saw yesterday. I mean, actually, it was not a nice move yesterday. It was a blowout move yesterday. Today is, I think, can be described as a nice, sort of smooth kind of trajectory we have set course on. We're up 35, 40 odd points. 10,457 is where we're at. That means we're about 25 odd points off the day's highest level. And I think as macros, and good macros at that, came to bear, it's kind of overshadowed what's essentially been a quiet, going nowhere kind of global cues. So looking good. And of course, I mean, the highlight one has to, as we have been over the last couple of hours, has been the PSU Bank space, which is buzzing and how 3% higher. But of course, it's a small change compared to the big cuts the index has seen over the last, couple of weeks now. Ekta, morning.
Hi Prashant, absolutely. That point is completely taken. But I think it's a combination of the better macros, the FII's net buying, as well as that PSU Bank rally that we're seeing, which is really aiding sentiment. So we have a very good and positive advanced decline ratio, which has only improved through the trading session. So that is a very good indicator. But besides that, like you mentioned, it is all about PSU banks. And one of the statements which really helped today was Bank of India saying that they've recovered 7,000 crores worth of NPAs. And that seems to have fueled sentiment in a lot of the other PSU banks. So BOB, OBC, Andhra Bank, Indian Bank, all of them have gained. But your point is taken because you have to put this rally into context. Year to date, the PSU Bank index itself is still down around 20-odd%. A lot of other stocks in focus. So for example, TCS, Interglobe Aviation, as well as the likes of Future Consumer, all of them which are buzzing around on the back of news. But we have Sudarshan Sukhani joining in this Tuesday to discuss what he is strategizing. So Sudarshan, over to you. Are you confident of the Nifty sustaining these levels, and what are you recommending?
Yeah, good morning again. Well, we certainly are on the long side of the market. See, the market decides what it wants to do. But given the conditions, we have been buyers last week, late last week, yesterday, and as we speak, even now, the Nifty is a buying opportunity with a stop under 415. And if you want to add to a position, initiate a new position on the long side, I think so. So to answer your question, we are buying, we are holding long positions. So it does appear that the momentum should take us towards 540, 10,540.
Okay. What would you trade, Sudarshan? Stocks?
Well, the Nifty itself is a buy, but mid caps are the place to be today. So Britania is a buying opportunity. FMCG stocks have been doing well, and Britania has been an outperformer. Today again, it should do well even as we speak. So Britania remains a buy. Havells is a buy. After a decent correction, Havells built a base and has broken out. So there is some momentum on the upside there. And finally, IndusInd Bank is a buying opportunity. IndusInd is not just a day trade. You could actually buy and hold positions in it. There is a strong momentum upside, and it should outperform.
Okay, fair enough. Sudarshan, we have a couple of Twitter queries. The first one is Karan. He has 50 shares of BEML, which he's bought at 1160. Wants to know the long-term view on the stock. BEML.
Well, BEML is something that you want to sell and get out. If you see the chart, the stock has been falling from 1800 to 1100. And this decline came about at a time when the Nifty was roaring upward. So this is a complete and clear underperformer. Get out of BEML, sell it. There are no future prospects which we can see now. If you want, you can switch to L&T, which is a far better stock to be in the same sector.
We've got a question on Ujjivan. Akash has 500 shares of Ujjivan purchased at 345 rupees each. What should he do? Sudarshan.
Well, he should hold on. See, there will be ups and downs in this market. We are in a correction. But eventually, he should get a price of 405 or higher. So let him be a short-term investor. Be patient for 6 months, and you should get 400 plus.
Okay, Sudarshan, before we let you go, I'm not sure if you commented on the OMCs and the kind of gains that we're seeing for the likes of HPCL and BPCL.
No, I have not. I'm not tracking the two stocks today, so I'm sorry, I can't comment on it too.
Okay, all right, fair enough, Sudarshan. We're going to let you go on that note. Thanks very much for joining in and taking us through those strategies. We have some more calls lined up. Gaurav Bissaf, LKP Securities, is with us. Gaurav, over to you then. Nifty as well as stocks.
Good morning. For Nifty, the trend is quite strong. There was a lot of trading that we saw at 10,300 mark. We conquered those levels, and then we saw a strong momentum coming in matter of a day or two. Going ahead, 10,500, 520 would be the immediate resistance levels. For fresh trades, I would rather wait for a dip. Any dip towards 10,420 would be a lucrative buy. Stop loss of 10,380 on the upside. 10,520, 540 is what I also expect to be seen in Nifty. For Bank Nifty, 25,000 has been a big hurdle. And if you look at the option chain, 25,000 call option had a very high concentration. We are still not trading above those levels on the spot side. And if we are not able to do so, there can be a small dip that we can see in the Bank Nifty as well. Again, that would be a lucrative opportunity to go long. So overall, the fabric of the market is strong. And I would not say there has been a reversal in the market, sort of that we can expect fresh high levels coming in Nifty and Bank Nifty. But as for another 2 or 3 percentage points, one can be long in the Nifty and the Bank Nifty. And if individual recommendations will be concerned, first recommendation would be buy on PC Jewelers. 4 to 5% over addition happening on intraday basis. Long position is seen getting built. Swing high being made today. It has been trading in a range, now showing early signs of coming out of that range, and it's a very high beta name. So if it sustains the current levels of 4 to 5% up on a single day, cannot be ruled out. With a small stops of 342, one can buy PC Jewelers for 360. Second would be buy on Bharat Finance. This is another name to see consistent short long positions getting built today. Today there has been an addition of 2 to 3% over additions. Last 3-4 days there has been consistent additions happening. It has been holding grounds. Today it has given a breakout with a stop loss of 1,058. One can buy it for targets of 1,088. And sole sell recommendation would be on Coal India. Short positions to tune of 4%. Breakdown below 300 mark, which had a very high concentration on the put side. So option wise breakdown has been seen. Breakdown on daily charts as well. Stop loss of 278, 279. And one can short it for targets of 265.
Gaurav, thanks very much for that. Appreciate you coming on with those strategies today. I mean, 40 points back on the Nifty, 10,461 is where we are at right now. The mid-cap index is also up 0.75%. I mean, that was the underperformer yesterday compared to what, of course, the Nifty was doing, but not so. Today it's doing better. TCS is under pressure today. We reported yesterday evening that Tata Sons, the holding company of the Tata Group, is selling 1.68% stake in the company via a large block deal, and that transaction happened earlier in the day. Rima is here with more on the same. Rima, morning.
Hi, and thanks so much for that. Yes, Tata Sons has sold close to about a 1.6% stake in TCS. The deal happened early in the morning at about a 5% discount to where the stock closed yesterday. And with this, Tata Sons holding in TCS has come down to close to about 72%. As we had reported yesterday, Tata Sons is likely to use this 10,000 crore of money that they've raised with this TCS stake sale to fund other group activities. Remember, they paid a significant liability to Tata Docomo, plus Tata Steel is looking at making some acquisitions. They could be looking at ramping up products in Tata Motors. So they have a lot going on in the group, and this money raised from their cash cow TCS could be used to fund that. A technical aspect of this deal is that the stake sale will help in increasing the free float of TCS, which could eventually help in increasing the weightage of TCS in the index. And also, IT sector has been outperforming. So TCS, for instance, has rallied nearly 12% compared to a 1% cut on the Nifty on a YTD basis. So the stake sale by Tata Sons also comes at an opportune time. Back to you.
Let's get talking about the commodity and the currency space. We have Manisha Gupta joining in to give us a roundup of what's happening today. Manisha, over to you.
Thank you so much for that, Ekta. Well, there's plenty happening in all of those commodity prices, agro and non-agro. But let's talk about the gold prices, because that has been under pressure. The US dollar has been firm, pulling the prices down. It also is about the US CPI data today, which is due. So the inflation outlook would come in from this one. And then, of course, the US March rate hike has pretty much fully been factored in by the gold prices. Right now, what the traders are awaiting is the Fed statement and the key forward guidance that it might really have to throw on. So next week is when that event is happening. And until that, you will be looking at choppy gold prices there. But there's plenty happening in the Indian markets as well. For last month or so, we have been talking about the diamond and the gold trade here in India. And while, of course, lots is in pipeline that is being discussed in sense of gold monetary policy, the exchange, and, of course, on how the whole asset class is looking to be turned around there. In the meanwhile, we also have seen discussions happen on the 2080 gold scheme, which was launched in August 2013 and was also scrapped by November 2014. As of now, of course, gold attracts 10% of an import duty, and there is 3% GST as well put on that. But let's discuss that and more. And Surendra Mehta of IBJA now joins us on a phone line to talk more about that. Mr. Mehta, hi. Thank you so much for joining us. First of all, what is your sense on the gold prices and the physical demand that you have seen in India? Because those numbers as of now do look dismal.
See, as far as the gold prices are concerned, the gold prices in this year are likely to range between $1,280 to $1,450. As far as the Indian prices are concerned, much will depend on the USD. The rupee weakening can increase the gold prices, but I am very positive about the gold because once the mandatory hallmarking comes, the people will start having a lot of confidence in the gold as a commodity, and the government is also doing a lot to make the gold as an asset class. So I am very positive about the gold market in 2018.
Sure. What also is your sense on the buying right now? Because the month of January and Feb clearly have seen lower imports. Now, for the month of March, of course, the markets are positive as you have Akshaya Tritiya in the month of April, and that is an auspicious day to buy gold. So the expectation is that we might see a surge in Indian imports at that time. Any number that comes to your mind?
The buyings are likely to pick up during from 18th of March when the auspicious season starts.
Okay.
And once the auspicious season starts, thereafter it is followed by the marriage season. So, of course, the gold prices, the gold demand is likely to go up during that period. Yes, the initial 2 months, because of the diamond scam and all, people have lost confidence in the precious metal also. But we are sure that precious metal has an international market value, and the buyers will return to the gold mine very soon.
And it's not just about the bank defaults and frauds, etc. The whole 2080 gold scheme is back in conversation as well. I mean, I do remember at that time when we were reporting on how it led to a lot of issues with the jewelers and the industry as a whole right now. How do you look at the conversation on that as we see it? And how do you look at the 10% gold import duty? Because that is something that presentations have been made on as well to, cut it down in some sense, if not by 50%, maybe at least up to 6%.
I would put the 2080 scheme into two parts. One from the August 2018 to May 2014. Basically, the scheme was introduced to check the current account deficit, to conserve the foreign exchange of the country, and to ensure that there are restrictions on import of golds, and to also ensure that the premium remains in the hands of the public agency. But what has happened after the 21st May 2014 circular about 2080, that has created a lot of distortion in the market as the premium went in the hands of the premium trading house and star trading house, who have been importing gold under 2080 scheme and selling for a premium which was about $100 to $150.
Yes.
And this was not at all beneficial to the smaller jewelers who were not into the export business, and they were forced to pay the higher premium. And we as a trade body has also informed the Reserve Bank of India at that point of time that this circular creates a problem for the small jewelers. The availability of gold for the small jewelers, they have to buy gold at a premium. And I think then it was removed in the month of November.
Yeah. So where we stand in sense of duties right now, do you think is a feasible, is an okay kind of scenario to trade within?
No, I don't think. I always been saying that gold duty cannot go down. The gold duty is here to remain at 10%. Even with 10% duty, there is a lot of import coming up in the country.
Sure.
And I see no reason. There is, if you compare with it with the smuggling, the cost-benefit analysis also says that the duty need not go down. So
Okay.
I don't see any reason for the duty.
The market's off 10 points from where it was, maybe say 10 minutes back, 10,452. Mid-cap index is coming off a little bit. So there seems to be some pressure. Banks, especially PSU banks, rebounding, big bounce. And I just want to put out 5 or 6 names. The index itself is up 3% plus, but Bank of India, let's begin with that, is up 10.5%, is back above 100. Opened at about 94 or so today. Look at that. Bank of Baroda is up 7%. It should come up on your screen. I mean, opened at 132, about 141 now. Union Bank opened at 90, at 97. So these are all, I mean, it's not as if they all gapped up in where they were, and there's been no change since then. Andhra Bank is up 6%, and that's also gained quite a bit from open. Oriental Bank of Commerce, Syndicate Bank, PNB opened at 94. It's at about 99 right now, 4% higher. So these are some of the big gainers across the board that we are seeing. I mean, I think except Central Bank, which is the one lone PSU bank name which I can see is down a little bit, everything else is up and about in that space. And of course, the trigger has been Bank of India, which has recovered NPAs worth 7,000 crores. One of the triggers. We spoke with Dinabandhu Mahapatra, Managing Director and CEO of the company, on the outlook of NPAs going ahead. Listen in to what he had to say.
Have you all managed to recover 7,000 crore rupees this year from Jan onwards?
Yes. In the meantime, we have recovered around 7,000 crores.
Okay.
So that will be reflected in this quarter's performance.
Okay. And you may do more?
Yes, some other also expected to be recovered.
So in the next couple of months, how much do you think you can recover? Another 2,000-3,000 crores?
I hope so. Q1, Q2 will be very good, but this Q4 will be, we are still calculating on the numbers, because of this we are discussing with different promoters and persuading them to recover whatever overdue amount. So that will depend on the entire process. But Q1, I know you see all these big accounts, NCLT accounts are expected to be resolved in Q1, and we are expecting a huge write back on that account.
Okay, and besides this, the other big important point is that the Reserve Bank has come up with a new set of norms for non-performing assets, or NPAs, and they have withdrawn all existing guidelines on restructuring of bad assets. This happened a couple of weeks ago. So schemes such as CDR, SDR, 5x25, S4A, all of them have now been replaced by new guidelines. We spoke to the managements of Bank of Baroda as well as Bank of India, and they say that they expect some rise in NPAs on account of the new norms.
The risk to the recovery is in two parts. Part one is some of the NCLT issues don't get settled in the time frame we expect them to, which is the first quarter of next year and the second quarter of next year, and maybe something towards the end of this month. Positivity is first and foremost that the steel and the cement sector recoveries seems to suggest that we will have a reversal of provision. That's a positive thing. The provision numbers are higher because of the revised accounting policy. We would still remain comfortable with respect to our capital adequacy and our net NPA number and our coverage ratio, and we would see a much better result next year. So I think I just want to look at it as some kind of a front ending which has happened to us twice before in terms of bringing the losses forward. There would be some pickup in the net NPA number and the gross NPA number, some of which will be offset because of the growth, but we'll still be within the zone of comfort.
It will definitely improve dramatically. We are trying our level best. Other recovery also we are targeting. It will be industry-wise impact, because of the recent guideline of RBI. We are all working the numbers. And for Bank of India, of course, there will be some increase in NPA because of that guideline. But good news is that you may be knowing that Bank of India already covered around 65% of its NPA, and some of the bigger accounts which are on the last stage of bidding stage, getting 80%, 70%, 70%, interest from the bidders. In those accounts, of some of the big accounts, we have already covered 100%. So we are expecting right back also on those accounts.